You know that split second when your phone buzzes, you see IRS in the subject, and your soul briefly exits your body? Let's keep your soul exactly where it belongs. We're going to build an audit-proof receipt system, not a shoebox of crumpled slips, not a vibes-based photo album, but a clean, simple, grown-up process that the IRS can follow without putting on hiking boots. I'll explain what counts as a receipt, why a bank statement isn't enough, how to annotate purpose so you don't panic a year later, and how to handle the troublemakers. Crypto, travel, home office, contractors, marketplaces, and those sneaky platform fees. Let's start with the IRS's love language. Your documentation wins when it's made at or near the time of the expense, when it's specific enough to show who, what, when, where, and why, and when it tells the same story everywhere. If you add the business purpose a year later, it smells like cologne on a gym shirt. Hopeful, but suspicious. If your receipt says lunch and nothing else, it's not telling the truth the IRS needs. And if your receipts say one thing while your statements, calendar, contracts, and tax return totals say another, the story breaks. Even if your bank or card statement shows you paid and how much you paid, that doesn't make it a receipt. It's a sidekick, not the hero. A real receipt or invoice shows the vendor's name and location, the date and the amount, and an itemized description of what you actually bought. The best versions also show proof of payment, like the last 4 digits of your card or a stamped paid. And then there's the secret sauce that wins audits, your purpose note. One short line that explains who you met, what project this relates to, which client is involved, or how the item supports your operations. The statement backs up the payment and date. The receipt proves the what and the why. Together, they sing in harmony. That harmony is what makes examiners relax. Imagine a dinner receipt that makes an examiner yawn with satisfaction. The header shows Marigold Bistro, with a real address and a timestamp. The line items are clear enough to avoid mystery. Entrees, coffee, nothing labeled miscellaneous. The total and the tip are legible. The payment line shows a masked card or a paid stamp. And then, right there on the PDF or written across the photo, you've added a crisp note. Dinner with Alex Rivera, client, to review Q4 renewal and statement of work draft. The next day, your calendar shows a meeting about the same renewal, and your proposal file updates right on schedule. It's a small stack of facts that line up, and the feeling it creates is irresistible. This person keeps records like a grown-up. Subscriptions and ad platforms need the same love. If you run on monthly software, save the invoice or the billing page that shows the plan, the period, and your business name. If you're buying equipment, keep the invoice with model and serial numbers so you can tie it to your fixed asset list later. When you buy services, hold on to the contract, the statement of work, and a short email confirming delivery. Every page you save is a breadcrumb in a trail that leads to yes. Meals, travel, and lodging always need extra care because they look personal even when they're not. For meals, keep the itemized receipt and write the purpose in the moment, not months later. Tie it to a business conversation, a client meeting, a vendor negotiation, a recruiting interview, or a project milestone. Avoid patterns that scream personal life, because daily brunch with your roommate will never transform into client development just because you wish it would. For travel and lodging, keep itineraries, boarding passes or e-tickets, and hotel folios. A booking confirmed email is not the same as a folio. The folio shows itemized nights and taxes and proves you actually stayed. Add a short purpose note and attach something real that shows why you traveled. A conference agenda, an email about a client visit, a project schedule. If the trip mixes business and personal days, document which days are business and allocate costs accordingly. If you track mileage instead of actual car costs, keep a log with dates, miles, start and stop points, destinations, and purpose. The IRS isn't trying to punish you. It just wants to understand the story quickly. And if you use per diems or other safe harbors, keep the policy you follow and the rates you use so your math doesn't look improvised. Digital businesses leak paperwork in strange places. Subscriptions are obvious, but ad platforms, app stores, and marketplaces hide the evidence in dashboards that no one bothers to download. Don't rely on logins that can change. Pull monthly invoices from each ad platform and save them. If you operate in countries that add a digital services tax or similar surcharges, make sure the invoice shows the line for that fee and decide how you'll book it. App stores and marketplaces are even trickier because they separate gross sales from fees, refunds, chargebacks, and net payouts. The settlement reports are your bridge from revenue to bank deposits, so capture and file those reports like your year depends on them. If foreign VAT or GST is involved, know whether you're the one collecting and remitting or whether the platform is the deemed supplier, and keep the platform's tax treatment notes so you don't double count or miss obligations. For digital assets, timestamps are everything. The IRS cares about when you had control and what the fair market value was at that moment. If you receive staking rewards or airdrops, write down the exact time, the asset and quantity, the wallet address, and the dollar value at receipt. When you dispose of tokens, capture the time, the quantity, the proceeds, the fees, and which lots you sold. Decide whether you're using first in, first out, or specific identification. If you choose specific identification, your lot tracking must be ironclad. If you're not meticulous, you won't be believed. And don't forget the weird kids in the DeFi neighborhood. Bridges, wraps, liquidity pool mints, and burns, restakes. In some systems, these can be taxable events even when your overall value feels flat. If you can't retrieve an old price, use a reputable historical source and record the method you used. If you truly lost a small receipt, reconstruct using exchange exports, on-chain explorers, and bank statements, then promise yourself you'll never rely on reconstruction as a habit. The calmer path is to log facts while they are fresh. Humans are messier than blockchains, and paying people proves it. Employees create a trail of pay stubs, payroll registers, tax deposits, and quarterly filings. Contractors should create a trail of signed agreements, statements of work, invoices that show deliverables and time periods, and a W-9 if they're U.S. payees. A classic audit pain is large contractor spending with no contracts, no invoices, and no W-9s. Another is treating people like contractors when they're effectively employees. Fixed hours, your equipment, tight supervision, no real business of their own. Solve this by making a simple prepayment rule. No contract, no invoice, no W-9, no pay. International contractors have their own paperwork realities. If withholding or special forms apply, collect them before the first payment. Trust me, future you will send past you a thank you meme. Inventory and fixed assets are where just trust me goes to die. For inventory and cost of goods sold, keep purchase orders, supplier invoices, shipping documents or bills of lading, and receiving logs. If goods are returned or defective, keep the credit memos. When you count inventory at year end, don't rely on memory. Keep the actual count sheets you used, sign and date them, and archive them. For fixed assets like computers, machinery, or furniture, keep invoices that show model and serial numbers, service contracts or warranties, and a depreciation schedule. If you use immediate expensing or bonus rules, save the election you filed with your return, and keep a short written policy that explains your capitalization threshold. When you dispose of an asset, record the date, any proceeds you received, and how you removed it from your books. Each of these pages saves you from having to tell long stories later. Now let's build your kitchen. A tidy folder structure and consistent file names make your receipts findable in seconds. Create a year folder for accounting, and inside it build homes for statements, sales, vendors, payroll and contractors, taxes, travel and meals, assets and inventory, and crypto. Keep one vendor per folder, so you never hunt through a pile. Name files so a stranger can understand them at a glance. Date, vendor, amount, category, and purpose. At the moment of purchase, snap the receipt and add the purpose line while the context is still warm in your mind. Each week, let email rules or a forwarding address catch invoices automatically so they land in the right place. Each month, reconcile every account. Tie add invoices to platform spend and match sales settlements to bank deposits. Each quarter, look at the categories that make auditors squint: meals, travel, supplies, contractors, and plug any documentation gaps. At year-end, export your crypto logs, finalize depreciation, and produce one short document that explains your entire receipt system. That single page becomes your treasure map. But what about lost receipts? Paper fades, apps crash, and people forget. When something goes missing, build a secondary evidence packet. Start with the card or bank statement that shows the payee and amount. Add a calendar event or an email that proves the business reason. Call the merchant and ask for a reprint. If you can't get one, write a brief explanation that covers what, when, where, why, and who. For small items, that may be fine. For lodging and bigger ticket items, the IRS expects proper documents, so don't make missing receipts a lifestyle choice. Train yourself to ask for a reprint within a week. Businesses are much more willing while the sale is fresh. You can set all of this up in a single day. Begin by creating your folder tree for the year and turning on email rules to corral invoices into a dedicated space. Pick a capture method you will actually use, whether that's a receipt app or a simple phone scanner that saves to PDF with searchable text. Decide on your file naming recipe and tape it to your monitor. Then grab the low-hanging fruit. Download the current month's platform invoices for ads and software, export bank and card statements through the last closed month, and put calendar reminders on repeat for weekly capture, monthly reconciliation, and a quarterly cleanup. In the afternoon, sweep through meals and travel for the last couple of months and add missing purpose notes before the context evaporates. If you pay contractors, collect W-9s and missing contracts now, before year-end panic. If you touch crypto, create a simple wallet map and export the most recent activity so you've got a baseline. For fixed assets, track down invoices with serial numbers and start your depreciation list. Then write your one-page index, the rules you follow, the examples you use, the methods you've chosen for mileage in crypto, the capitalization threshold for assets, and the simple calendar of who does what by when, even if the who is you. That one page is the opener of your audit packet. It says you're organized, consistent, and credible. Your receipt system isn't just about being neat. It neutralizes classic audit triggers. If a third-party form doesn't match your return, your reconciliation folder shows exactly how marketplace settlements tied to revenue and explains any timing differences. If your meals and travel look high for your revenue, your itemized receipts, purpose notes, and calendar agendas make the business case in seconds. If contractor costs are large, your agreements, invoices, and W-9s prove substance and status. If crypto looks invisible, your wallet logs, timestamps, and valuation evidence prove the income at receipt and the results at disposal. And your lot method is declared and consistent. If your home office deduction seems suspicious, you have photos, a sketch of the space, square footage calculations, and either the simplified method evidence or the actual allocation worksheets for utilities and internet. If your equipment purchases seem oddly expensed, you produce your capitalization policy, the invoices with serial numbers, the depreciation schedule, and the election in your return. And if a government wonders where your business really lives, your board minutes, signature locations, and director travel corroborate the story you told on your return. Receipts aren't just paper, they're your narrative spine. If the letter still comes, please provide documentation for the following items. Respond like a pro. Mirror the examiner's list so your packet follows their headings in the same order. Lead with your one-page index so they instantly understand your methods and where documents live. Place the cleanest proof first. Receipts and invoices with your purpose notes, then the bank or card statements that corroborate payment. Then calendars, contracts, and emails that provide context. Where the facts are unusual, write a short, polite explanation. Keep your tone gloriously boring. Organized people are rarely interesting to audit, and that's the point. If something is genuinely missing, reconstruct it as best you can and label it clearly. Examiners respect honest effort. There are 4 micro habits that will make your system hum, even when life gets messy. First, write the business purpose on the receipt in the moment, before your coffee cools and your memory goes on vacation. Second, make one place the single source of truth. Don't scatter half your documents in email, a quarter in photos, and the rest in a folder called New Final. Third, close the month on schedule, because reconciling small batches is cheaper than reconciling panic. Fourth, teach your team your rules, even if the team is just you plus future you. Make no W-9, no pay a mantra. Add no invoice, no expense as the chorus. Keep the one-page index in front of anyone who spends your money or files your paperwork. Here's the calm you can feel at the end. The IRS doesn't expect perfection. It expects coherence. A receipt says what you bought. A statement proves you paid. A calendar shows why you were there. A contract names who did what by when. Your index explains how the whole machine runs. When those pieces line up, your paperwork stops being a pile and becomes a story. Build the folder tree. Name files so a stranger could follow them. Capture purpose while it's fresh. Reconcile on a schedule. Treat special categories, travel, meals, lodging, crypto, contractors, assets with extra care. And when life goes sideways, reconstruct with honesty and move on. Do this, and the next time your phone buzzes with a tax subject line, your soul will stay put. You might even smile because you'll have the story, the receipts, and the calm to match.